You are net short in your hedge fund. Why?
Well, I think, if you look back on December 24th, we put out a tweet on this, and I think you had me on the air soon after, talking about the fact that we thought the market was oversold. It had one of the 7 worst starts in history for a Q4. And so, you look at that and you say, well, 5 of those other times were during the Great Depression, and once was when Lehman Brothers failed. So market clearly had gotten oversold. But if you look at this rally, the rally's been 19% after a sell-off of 20%. And if you look back through history, and we put out a chart on this under my handle at Daniel T. Niles, where you can see that normally these bounces are about 15% over 38 days. This bounce has been 19% over 67 days. There's been no 3% correction. So, you talked about this, I think, in some earlier segments where, optimism has gotten really high over this trade deal. People are excited that the Fed doesn't look like they're going to be raising much anymore. But, you look at some of the economic data still coming out, it's not necessarily that bullish. So it doesn't make sense for the market, in my opinion, to have ripped up as much as it has, especially when, you've got earnings coming up pretty soon. We're in the month of March, and I think you're going to see a lot of issues with some of these sectors that have bounced the hardest, like in semiconductors, for example.
You also seem to think we're going to see some issues overall just in terms of the data points for global growth. Why?
Well, you're seeing some of it already, right? You talked in the earlier segment about China. They're forecasting 6 to 6.5% growth, which is the slowest in decades. You're talking about them cutting taxes in certain areas. Interestingly enough, obviously, a lot of the U.S. presidential candidates are talking about raising taxes, etc. And you look at Europe. We're debating, is there going to be need for their version of quantitative easing there? Is Germany potentially going into a recession? We still don't know what's going on with Brexit. So there's, global growth in general is not that robust, and multiples of, off this 20% rally have gotten back to relatively high levels for the level of growth that you're running.
Yeah, we're looking at the names of FANG, which brings me to some of the names you're short. It's always nice to get somebody who comes on and actually talks about what they're short. It doesn't happen nearly often enough. Let's start with Netflix. Why are you short the stock?
Well, I think you have to think about it this way. Netflix has done a fantastic job. It's my guilty pleasure. When I have to relax, I sit down and watch Netflix. The problem this year is, if you think about it, you've got Apple coming into the market streaming. You've got other big players like Disney. A lot of what I watch on Netflix is actually Disney content. Disney will be pulling that content at the end of this year in terms of some of the new movies coming out. Won't be on there, like Captain Marvel, which is launching in a few days. And so I think they're going to have a lot more competition. And don't forget, Netflix still burns $3 billion in cash flow every year. And then you've got Comcast coming next year, and you've got Warner Media, which is owned by AT&T, obviously, coming later this year. So you've got a lot more competition coming, but more importantly, a lot of the content that you like to watch, like I like watching, the Marvel series of Avengers movies.
Right.
They're not going to be on that going forward, so you're going to have to move to someplace else. So those are things I don't like.
The underlying assumption, though, is that people will actually move off the platform. Nothing seems to indicate that, even with the potential proliferation of other services, as you say. You seem to believe that people will start to leave Netflix. I kind of find that hard to imagine right now.
Well, it's not leaving. It's a question of growth, right? And that's what you have to think about. So if you're going to sign up for a new service, and again, you can't look at the way I look at it, you can't look at shorts in isolation. So you have to look at, especially when you're running a hedge fund, which we are, how are these things matched up? So you have to remember, we're long a fair number of stocks in the internet space. We bought Alibaba, we bought Baidu, we like those names in China. These are stocks in Baidu's case down 40% from its 52-week high, where Netflix is obviously up 50% from its 52-week low. So, there's balances to all of this. We love electronic arts. We think that's going to do very well in terms of streaming games. I think the new game that they put out, Apex Legends, is going to do fantastically well. That stock's down 35% from its 52-week high. They're at 50 million users in a month. It took Fortnite 4 months to get to 45 million users. And likewise with Apple, we're back to being short that. We actually had gotten long that, believe it or not, in early January for a bounce, which it did. We're back to being shorted, but we're also long momentum against that, which supplies all the 3D sensors. So, a lot of this is balancing out the longs and the shorts. And, on December 24th, we had one short. Now we've got more percentage on the short side than we do on the long side, and so I think it's a matter of positioning.
Hey, Dan, it's Sarah. I know we're going to hit Apple in a moment, but just on Netflix, I mean, this has got to be a painful stock to be short. It's up more than 50% from the lows, up 30% so far this year. A lot of the reasons you laid out are not new. We've heard it from Netflix bears. What do you think actually turns the tide, and how painful has this been for you?
All right, it hasn't been painful at all. You have to remember, it's a question of when you put the short on. Netflix actually was one of our best profit generators last year on the short side, but a lot of this is timing. We weren't short Netflix on December 24th. The only stock we were short on December 24th was, I think it was Verizon. We just put this on very, very recently. So, some of this is, again, how you're matching this up. For us on Netflix, it may be a lot like Apple, right? Apple people had just blind optimism up until about October, and then the stock came completely unglued. If you look at Netflix, it may be the same situation where you're going to have to wait until you get closer to Disney launching, to Warner Media launching, to later this year, to Apple putting out their streaming service, which I don't think is going to be particularly good. But anyway, looking at that, and it may take that to slow down the momentum in that name. I mean, for me, I like companies that throw off a lot of cash flow. Netflix is burning $3 billion in cash flow. So it's a great service. It's a great company. It does not make it a great stock at that valuation, and that's what I'm trying to get across. Yeah. And then those are two very different things. And timing, you would have been suicidal to be short this on December 24th. At these levels, up 50% from its lows on December 24th, that's a totally different situation, especially if you're long other names in Internet, like an Alibaba or a Baidu, et cetera, that you like a lot better, or Electronic Arts, for